Welcome back to Buy Now, Sell Now, and this is the show where we get you answers for all your stock-related queries. And today on the show, we do have two of our experts to guide you better. But before we go to them, viewers, just take a note that how you can connect with us. So that's the number that is flashing on your screen, and throughout the show, we'll be flashing on the top of a screen where you can write to us your stock query, as well as tell us the buy price, as well as the time horizon you wish to stay invested. Any other details you want to help share with us, please do that, and we'll try to take as many queries as possible. Today there is a techie special. We do have Kunal Bothra with us, as well as Sneha Seth is also joining us on the show. A very good morning to both of you, and thank you so much for your time. A lot of queries are already pouring in, so let me take the first query, and this one is coming in on Piramal Pharma. Kunal, let me take it from you, wherein RK Ahuja is having more than 50% profit in his investments with respect to Piramal Pharma. What to do with this particular counter? Is that a hold or sell at this price point?
So it depends on your time frame. My assumption is that you are looking at this as a longer term kind of a hold. The chart history is limited for Piramal Pharma for me to extrapolate really on the longer term basis. But then whatever we've seen over the last 1 year or so for Piramal Pharma, from a point when the stock was 2 digits, I've been tracking the stock from sub 100 levels, 80, 87 approximately, towards a point when the stock recently tested, I think 300 odd mark. I think it's done exceptionally well. So from long term play, still looks attractive. I would suggest a hold, but again depends on what kind of time frame and as well as what kind of risk appetite you're looking out for.
Alright, so chart history is limited, can't really extrapolate for the longer term in terms of what you should be doing when it comes to that particular counter. But Sneha, I'll come to you with the next one because we do have Sally Devi writing to us from Kerala, wants to know about Nestle. Is it a good time to buy at this point?
See, if we look at the chart structure for this counter, we have seen decent profit taking recently, and now it has been consolidating. However, if we look at the overall chart structure, I believe if in case of any declines, at least towards 2100, 150, that zone should be the ideal zone to add any fresh long in this counter. Because if we see on the weekly chart, there is a good support placed around 2100 zone. So I believe any dips towards 2150 would be an ideal levels or an ideal range to go ahead and buy. In case of any strong move beyond 2300 would be very interesting for this counter, and which can bring some buying interest in this particular counter. If someone wants to go ahead and long buy in dips, and on the higher side, 2003 is the zone which you should be looking at. Any move beyond that would be very interesting.
All right, that's the take coming in on Nestle India. But Kunal, once again coming to you, this query is coming in from Revant. He's saying that he's a big fan of yours and he wants your advice on two of the counters. One of them is Ashoka Buildcon, holding 7,000 shares. His buy price is 235 rupees. Wants a 3 to 6 months target on this particular stock. And he also has PNB Housing, holding 520 shares. Buy price here is 871 rupees. Here too, he wants to have a target for 3 to 6 months. But if you say he can hold on for a long term as well.
Thank you so much for that. First of all, so I think on both the stocks, PNB Housing, as well as the second stock which you mentioned was
Ashoka Buildcon.
Ashoka Buildcon. So both of these stocks have different in terms of the chart structure. I was looking at the charts. Ashoka Buildcon, for example, the stock in the last 6 months or so has been more or less sideways. It's been trading into a pivot range closer to that 225 as a pivot point for Ashoka Buildcon, which means that the stock has this capacity to absorb a major part of the volatility. That's a good sign for the stock. And my sense is that potentially whenever the markets get back into a very strong trending kind of a mode, then you might probably expect these stocks to get back into a breakout. So I would suggest to hold Ashoka Buildcon purely in the anticipation that the stock is a lot more resilient and could start to outperform whenever the markets get back into a recovery. Now PNB Housing, on the other hand, the stock is nearing a break below its 200 moving average. The only concern with the stock is the beta nature of the stock, which is very high, and we've seen historically that when markets get back into a extreme corrective phase, these high beta stocks, they tend to correct a lot more sharper. So my suggestion is maybe keep a trailing stop loss for PNB Housing closer to this long term moving average, say closer to 820, 800 range. If the stock breaks below this mark on closing basis, I would suggest to exit and then look to buy back again whenever the stock gets back into a corrective mode. Say closer to 740, 750 could be a very good level to re-enter PNB Housing.
Well, absolutely. So those are the levels that you're looking at when it comes to PNB Housing as well as Ashoka Buildcon. I'm going to come to you with the next one, Sneha, because we do have Raman writing to us from Kerala. Wants to know about a couple of counters. Union Bank is the first one, 10,000 shares is what he's holding on to. Buy price is 148 rupees, and even 1 lakh shares of Yes Bank that he's also holding on to at an attractive buy price of 25 rupees is what he's looking at for Yes Bank as well. Now, what he really wants to know is whether he can pull out the funds from Union Bank as well as Yes Bank and put all of those funds in NMDC, because he's really looking at the bonus issue. That is something that he's watching out for. So what do you make of this then?
See, if we talk about Union Bank specifically, the chart structure at this point in time, if someone wants to go ahead and long or anyone is holding a position in this counter, I would say the risk reward ratio at this point in time for a buy trade is decent. I believe 107 should be a strict stop loss if you're holding this particular counter. Uh, about Yes Bank, yes, you should, you should think of, removing the fund from this counter. And the counter which you said that was NMDC, right?
Yeah, that's correct. So he wants to pull out money from Union Bank as well as his holdings in Yes Bank and put all of that money in NMDC. Do you think that's a good idea?
I think that would be a good idea, because if we look at the chart structure for NMDC, it is quite stable. We are seeing decent, uh, some profit taking already has been done, and a strong base formation is now placed around 205, 202. That zone is a very strong support zone. So if someone wants to go ahead and long, I don't think there is an issue in this counter. With a strict stop loss of 204, you can hold it. And for an up move, it is very important this counter should surpass 245 zone. Once it surpasses 245, then we may see a smart move at least towards 280 to 85 zone even.
All right, that's the take on the couple of counters. But Sneha, I'm once again coming to you because this query is from Satya, and he's looking out for two of your top bets on the technical front, where he can go ahead and invest for a short term, maybe for the next 1 to 3 months. So any stock that's on your radar which can give a bounce in the short term, and the expected targets and stop loss, if you can share as well.
Yes, if we look at the counters at this point in time, I'm liking Ultratech. Here we are seeing decent up move. Apart from this, there is Grasim even if this counter is a little bit costly. So mostly traders avoid. So you can even focus on Grasim over here at this current levels. This counter has made a strong base now. The 200-day simple moving average has been acting as support, and it's the second day that wherein we are seeing some buying interest coming in. So I expect this counter to head towards 2,700, 720 zone. So if someone wants to go ahead and long, can go ahead with a strict stop loss of around 2,500.
Well, absolutely. So those are the two counters that you should be watching out for. But I'm going to come to you with the next one, because Kunal Veni is writing to us from Hyderabad. He's a regular viewer of the show, and Bank of Maharashtra is really the stock that he's asking about, because he has 2,800 shares at a buy price of 63 rupees that he's bought. That is about 10 rupees higher than the current market price. What do you make of this particular holding that he has?
Yeah, it's been a concerning chart for Bank of Maharashtra, because the stock actually topped out in the month of June, July, when it made a high closer to 73, 74 levels, and from there on the stock has been going into a drag. I think more or less a story of the entire PSU banking theme, where many of the PSU banking stocks had topped out, I think closer to June, July, and from there on we saw almost like a 3 to 4 month kind of a corrective phase. Now, the stock is at a divergence of almost 20% when we look at this from the 200 moving average. And we've seen historically that 25 to 30% of a divergence from a long-term moving average for stocks, they generally become points where the stocks come back into a mean reversion phase. So net, I would believe that if in case the stock drops down to say 48 levels or slightly below those 48 mark, I would suggest that you can continue to stay put, as well as look to average if the stock falls below 48 levels. That's where I would believe that there could be a higher probability that the stock may come back closer to the 54, 55 mark. So I would suggest to buy on dips closer to 48 levels or slightly below those levels.
All right, that's the take coming in on Bank of Maharashtra. But the next query, Sneha, that I have is coming in on Cochin Shipyard, wherein Thomas George from Kochi is holding 100 shares and his buy price is 1510 rupees. One of the beaten down names, Sneha, and he too is at a loss in this one. But what's your take coming in on this counter and what should he do?
If the chart structure, if we see it has been continuously in the downtrend, any bounce back is not being, supported with follow-up buying interest. So I believe, looking at the overall chart structure, I think there are chances that the counter can correct further. So I would suggest exiting it. That would be a better strategy in this counter because any correction below the recent close of like around, if it corrects below 1280, I believe then we may see a correction at least towards 1150, 1140. That zone is possible in this counter. So it's better that you exit it and switch to some other counters.
Alright, then that's an exit recommendation coming in on Cochin Shipyard. Time for a very quick breather on the show. When we come back, viewers, we'll continue taking all of your stock related queries, so don't go anywhere. Welcome back. Thank you so much for staying tuned in to Buy Now, Sell Now. Let's continue taking all of your stock related queries then. And the next one is coming in for you, Kunal, because there is Raman who's writing to us from Chennai. Wants to know about SBI Life Insurance, a good bet from a 1 year perspective?
I don't think so. I've been tracking this stock for the last 2-3 years, and I've seen historically that the stock gets back into a very sharp corrective phases every now and then. It falls below the critical moving averages, for example, or supports. In this case, the crucial support for SBI Life on the short-term charts was around the 1750, 1800 levels. That got breached for the stock a couple of months back, and now the stock has fallen below the 200 DMA as well. So this is a stock which ideally should be bought into whenever it gets back into a recovery phase, and one should typically not look to buy the stock when it is into a downtrend. The breakout point for SBI Life, in my sense, would be, I think, when the stock breaks past about the 1600 levels. So if on closing basis you see a breakout above 1600 levels, that's where you should look to start entering into the stock price, because buying on confirmation for a stock like this generally plays out a good reward strategy as compared to stocks when you try to buy the dips for names like SBI Life.
All right, that's the take coming in on SBI Life. But Sneha, the next query that I have is coming in from Nikhil Sharma from Mumbai. He is an intraday trader, is what he says, and he wants to know the right time to sell PFC. His buy price is close to 480 rupees, and today, yes, indeed, the stock got hammered yesterday, but today the stock is seeing decent up move. What will be your take? Will that be a good move to like exit at 480 levels, or he should continue to hold on?
So I believe he's holding a sell trade over here, and looking at the overall chart structure, I think this counter is in a consolidation phase, wherein on the higher side, I believe there is a resistance around 480-85 zone, and on the downside, there is a support around 430. In case someone wants to take a directional bets, I would suggest that only if we see an up move or any this counter surpassing any either a resistance zone or is a support zone, then only one should take a fresh trade. But in case if someone is already holding, keep a strict stop loss of around 480 in this case as a stop loss for someone who is holding a short position.
Alright, then that's the take coming in as far as PFC is concerned. Kunal, I'm going to come to you with the next one because we do have Tina who's writing to us about MCX as well as BSE. Now, she wants to know about whether she can hold for 12 to 18 months and if it's a good time to enter both of these counters. What do you make of them?
See, on the short-term charts as well as on the long-term charts, these stocks have done reasonably well. Short-term wise, the reason why I call it as strong outperforming charts is the resilience these stocks have been showing over the last 7-8 weeks of this market volatility, and wherever these stocks have gone back into a mild corrective phase, you've seen these stocks holding on to their support levels. But in an ideal scenario, we've seen that such kind of charts also eventually seen to get back into a corrective phase. So my sense is that keep a trailing stop loss if you're a short-term investor and if you've already invested into these names. Maybe I think 6,100 on closing basis could be a good stop loss for MCX on the short term. For BSE, you can keep a stop loss at the 20-day moving average, which I think at current levels is around 44.80, 45.20 levels for BSE. So keep these two trailing stop losses. In case if these stop losses are not breached, then I would believe that these stocks can be held on to.
All right, that's the take on BSE as well as MCX. But Kunal, let me get back to you because the next query that I have is on big boy Reliance, wherein Rohit wants to know, can he go ahead and buy Reliance today itself? But he's looking for a long-term investment here.
Yeah, of course, from a long-term play, it looks very attractive, and especially with the 20% plus correction for Reliance Industries from 1650 odd levels after the adjustment of the bonus, of course, towards current levels of 1200, 1220 mark. The stock has is come back to a reasonable entry point. But remember, I think when stocks see such kind of a sharp correction, there's bound to be a point when these stocks remain more sideways and generally don't participate in the same gusto whenever the market gets back to a first stage of a recovery. So I'm assuming that you're okay with that, and since you're a long-term investor or your time frame is long-term, I believe it's a very good time where you can look to start investing. And generally we recommend investing of say 25%, 30%, but in this case, because Reliance Industries has come back towards a major support as well as a sharp corrective phase, I think you can invest more than 50% of your expected quantity also at current levels.
Alright, then that's the take coming in as far as big boy Reliance is concerned. Sneha, I'm going to come to you with the next one because Seva wants a combination view really. So I'm going to come to you first. The counters that he has on his list are Indian Hotels, Federal Bank and Asian Paints. Now for Indian Hotels, he bought the, he hasn't mentioned how many shares he did really buy, but he bought it at a price of 780. When it comes to Indian Hotels, Federal Bank at 210 and Asian Paints at 2560. What do you make of all of these three counters and what should he really do?
If we talk about Indian hotels, that counter has been doing a very good job. Like if we see the overall chart structure is quite good, and every strong up move has been supported with volumes. And in such kind of a market, this counter has been doing very good. So if someone is holding this counter, I believe one can continue to hold for the target of at least 800, 810 is the level which I would be looking for. And apart from this, the counter which you said, that is Federal Bank. Here also the chart structure looks quite good. This counter is again one of the counter which is performing quite good. So if someone is holding this counter as well, may continue to hold with a strict stop loss of around 202. An upside potential target would be at least towards 220 to 24 is the level which I'm looking for this counter as well. Asian Paints was the another counter which you told, and I think here we are seeing decent correction. And here, looking at the overall chart structure, whenever we see such kind of a correction in a counter with a gap, and there are chances that this counter may consolidate. So I would prefer this. I would avoid any kind of a trade in this counter at this point in time, unless and until we see a very, a strong move coming in. But I think there are more chances that this counter may continue to, consolidate for some time. So it's a avoid for me.
Then that's an avoid coming in on Asian Paints. Tell you what, Kunal, I'm going to come to you. Viewers, of course, this is a techie special on buy now, sell now. So it's not going to be possible for us to take a combination view. But Kunal, curious to know your take on all of these three counters then.
Federal Bank, Asian Paints, as well as the third one was?
The third one is Indian Hotels.
Okay, so all three of them, I would believe, for example, Federal Bank and Indian Hotels have been very bullish on. My sense is that these stocks are going into a different tangent of a price trend altogether. So, when stocks show signs of resilience, become sector leaders, that's a sign that these stocks have, matured into a very strong uptrend. And they are the ones which continue to do very well for themselves for weeks, months, and even quarters, depending on how long the sector trend continues for these names. So I think Indian Hotels and Federal Bank, I would believe that they could be part of your buy list even at current levels, as well as a buy on dips in case if these stocks provide any kind of a mild correction. Asian Paints, on the other hand, I think is a very, very volatile stock. Now, of course, the stock has done exceptionally well over the last 15, 20 years and more. But then when I look at this recent chart patterns, the tendency of the stock or the beta of the stock and the susceptibility rather with respect to the crude oil prices, it seems like the trend is not yet settled for Asian Paints. So you might be in for some bit of recovery into the stock price, but whether it results into a long-term uptrend, I would still have a lot of doubts over here. So it's better to, as of now, concentrate on some other names on the larger cap space rather than Asian Paints, looking at the way the chart structures have been more fragile over the last 6 months or so.
All right, that's the take on a couple of names. But the next query, Sneha, is coming in from Amit from Mumbai, and he wants your take on Coal India. holding 50 shares. Buy price is 470 rupees. Though this is also one of the beaten down names in the PSU pack, but it's trying to recover in today's trading session. What's your view coming in on Coal India, Sneha? Is this worth averaging this counter at this price point?
I believe looking at the overall chart structure, there are chances that this counter can slide further down. So I would suggest if someone wants to go at an average, they should be looking for the zone which is around 390, 380. That is the zone one should be looking. So in case of any dips towards those zone, I think that would be an ideal time to average your trade over here. And for an up move, I believe for at least an up move, at least towards 430, 435, then only we may see some, some buying interest coming in. Otherwise, there are chances that it may, continue to correct little bit and consolidate. That is the view coming in. But for an up move, the important level will be around 435, 440 zone for this count.
That's a take coming in as far as Coal India is concerned. Kunal, I'm going to come to you with the next one because the next query is coming in from Vignesh, who's mentioned that he's a very big fan of yours and he wants to know about SBI. Then 110 shares is what he's holding on to with a buy price of 760 rupees. Any near-term targets that you have in mind?
Thank you so much for that, Vignesh. Now, I always believe that good prices and good news, they never come together, especially for a large cap name like SBI. Of course, the stock has been beaten over the last 1 week or so on the back of a lot of this news flow which has been going around. But it's remained a quality stock over the last many years. There was a point where SBI was almost at 150, 180, I think 2019-20 or so. And from there, when you see the stock, getting to a breakout, it's gone to almost like a 4x to 5x kind of a return in a span of the last 3 to 4 years. Now, there are bound to be a phase where, the stock may consolidate, but it's a very good time to try and chip into those, points when the stock corrects and consolidates, and especially at the lower end of the price trend. So I think at current levels, I would believe it's a very good buy territory for SBI if you're a long-term investor, and it has to be a part of your core portfolio, especially from the large cap front.
All right, that's the top bet coming in from Kunal and his take, I beg your pardon, coming in on SBI. But the next query that I have, Kunal, is coming in on two of the cement counters, and that is Ambuja Cement as well as ACC, because there's a viewer named Vinay from Bangalore, and he just yesterday, given the fall, he entered into both of these names. If we can show the intraday chart, we'll get the picture that today itself these are having good moves, and Vinay is sitting at a 6% profit. What's your take on both of these names, Kunal? In the short term, good to book out profits or continue to hold on?
Yeah, but because your strategy of buying these stocks was because maybe it's oversold, or the news flow could probably provide us an opportunity of a bounce back. I think that's played out. You can't expect these stocks to keep on giving you stellar or steady returns, because when you have such kind of news flow, every other alternate day, in a very short span of time, these stocks are bound to get a lot more volatile. So it's always better to try and book profits over here and then switch on to the solid stocks, because what you're looking out for is not just recovery into the stocks or a set of stocks which are related to the Adani pack, but you're looking at a potential recovery which could be possible in the markets. And if that happens, then quality stocks and the ones which have been very strong, sturdy, they are the ones which should eventually give you more risk reward, more benefits over the short to medium term. So I think you've got the initial pop in terms of your trading bets on the Adani group of names, two of the stocks which you mentioned. I would believe that's a good time to book our profits and switch to formidable names.
Well, absolutely. Then that's a take coming in. As far as Ambuja Cements and ACC are concerned, Sneha, I'll come right back to you because we do have Shashank writing to us from UP. Wants to know about CDSL. He really just wants to know if there's a price that you have in mind for a fresh entry for the longer term then.
If you look at the chart structure, this counter has, been showing strength, continuously trading above the 20 DEMA recently, although it has tested that. But again, the overall chart structure is quite good. There is a strong base formation around 130, 140 odd zone. 1340, 1350 odd zone. And looking at the overall chart structure, I believe on the higher side, there is a resistance place around 1630. Which should ideally act as a resistance over here. But any move only and above 1630, 1640 would be very interesting for this counter. Unless and until we don't see an up move beyond this, one should avoid any fresh trades into it. Someone who's already holding, there is no harm in holding, but taking a fresh trade, I would only suggest only above 1630, 1640 zone. Someone who's holding may continue to hold, because any move beyond this zone would, bring some momentum in this counter. Looking at the overall chart structure and the way market is performing, I would currently avoid to trade, at least take a fresh long at this point in time.
Alright, then there you go. That's the take coming in as far as CDSL is concerned, viewers. But it's time to take a very quick break on the show. When we come back, we'll continue taking all of your stock related queries. So don't go anywhere.
Welcome back to Buy Now Sell Now, and let's keep it going with all your stock related queries. Then, and the next query that I have, Kunal, is coming in on Paytm, because this query is from D Majumdar, where he has bought 170 shares of Paytm at a price of 489 rupees, and given the move, he's indeed at great profits in this one now. What's your advice, Kunal? What to do with this particular stock? Continue to hold on?
Yeah, continue to hold on. I think it's just about getting back into a big breakout mode. The previous highs in 2023 for Paytm was around the 998 levels. On closing basis, it was just about the 920 mark, 921 on the monthly closing basis, and the stock is nearing the break of 900 levels. So it looks attractive. The setup is quite strong for Paytm. The recent recovery in the last 5-6 months indicates that the stock should be good for more higher uptrend. There could be a point where in the near term the stock may get back into a corrective phase, but since you've bought at much lower levels, I think you have a good buffer and cushion to hold on to the stock, especially from a long-term play.
Alright then, Kunal, the next one is also coming in for you from the Friday fan club, really, because Deepan Rajgopal is also mentioning that he's a very big fan of yours, and he wants to know about L&T buy price 3,825, and 3,000 shares is what he's holding on to. Wants to know what kind of target price you have in mind then.
Thank you so much once again. For L&T, I think it's been a fantastic chart over the long term. Recently also, I've seen this behavior for L&T as a stock price, that the stock has managed to make a higher low, and that too at a point where in the first leg of the market correction from 26,000 odd mark, L&T was one of the few large cap names which was beaten down significantly. So a stock which has inherently started to show a lot of resilience. I would believe at current levels of 3,500, 3,520, it's a good price where you can look to even average further for L&T, because my sense is that if in case the markets get back into a second leg of recovery, there could be a possibility that L&T should come back towards at least 3,650 to 3,700 levels over the very near term.
All right, that's the take coming in on L&T. But Kunal, one of the movers and one of the strong candidates in this market move is Fortis Healthcare, because like I was checking the chart, it is indeed at its all-time high, wherein Venkat Ramani is holding over 400 shares, but his buy price is 478 rupees. What to do with this particular counter, Kunal?
See, I've been tracking the stock in the last 2-3 months, and I've seen the breakout for Fortis just about the 500 levels. I think it was in the month of June, July somewhere, when the stock had given a breakout, and now I think today or yesterday the stock made a high of 700 levels. The only concern which I see for the charts for Fortis Healthcare is that the volumes have started to shoot up higher, and the indicators are coming back into an overbought territory, which means we could be at a point where the stock may take a pause, or there could be a point of reversal. Now, the best anticipation for this is to have a trailing stop loss. Since you've bought at 470 short levels for Fortis, I would believe that maybe keep a 2-day, 3-day swing low as a stop loss for the trade. 640 approximately could be a decent stop loss. If the stock doesn't break below those levels, continue to hold on.
Alright, then that's a take coming in as far as Fortis Health is concerned. Kunal, thank you so much for joining us, as well as a thank you to Sneha. Thanks for all of the queries that you've answered today, Kunal. But with that, completely out of time on this edition of Buy Now Sell Now on ET Now. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.